Hello everyone, thank you for joining today. We are going to look at some of the trades that I have shared during these days, yesterday and today. The first one is going to be oil. Yesterday, just one moment. The first one that we are going to look at in details is oil. It is very complex situation, as you may see. As we have seen oil from the top of the structure when the war between Ukraine and Russia began, it was at this point, so it reached an all-time high. It was very strange that oil began the movement, so after a short period of time in March 16, as you may see here, this was the bottom, so price moved down immediately, and after that we can see the price that increased again. After that moment, from June 8, as you may see, oil is in a clear downtrend from this point after this type of correction, so everything was normal in this type of waves, and after that we see the bearish movements. However, it's very strange overall, but we all know that no one wants a higher oil price, despite the fact that the economy is suffering related to the energy crisis. And our focus will be mainly on this part of the structure. So let's see what is going to happen there. From these 2 points here that I'm focused for the moment, these are dating back on September 22. The next one is October 22, and here we are from November. So from November and on, price is below 89, or let's say better 90, it doesn't matter, $19, that the price is just moving below this area. If we are going to look at back on the past, we will see that this area in normal conditions acted very strong. We may see that on October 18, $86 that we may see here was a very sensitive area. Look at the zone here. After price retested this zone, it came down. We may see the same situation was repeated at this point. As you may see, this is dating back in October 21. And after that, we see the bearish movement again. So very sensitive price zone. If we are going to look at back on earlier zones on the chart, this is dating back on June 12. So after the price came down, we see the buyers to join the market, and this is all for this price. So overall, when the situation tends to calm down, this is showing that the price is very expensive close to this zone, close to 90. So what is happening related with the structure analysis that we are looking at here? We have one zone where the price is positioned for the moment, and the first area that the price may test if this is going to rise, this is dating back on October 22 and also on November 22. As long as the price will develop below 89.5, 89.2, it doesn't matter, the price will tend to move down again. As you can see, the bearish movement already began there. I shared this analysis during morning when price was close to this area. And here we have the beginning of the bearish movement. It is getting very interesting. If we are going to look at on the hour time frame, the first price reaction was very interesting. This is not confirming the bearish movement yet. It's too early for us to anticipate the bearish movement. However, this is a good beginning at this point. Probably the price may test 84. It can create any pullback, and after that, it can test the bottom again. I wouldn't be surprised that during the coming months probably we may see the price even to break the structure, and probably it can continue lower. We should remember that the economic situation is getting more stable. Europe is getting out from the energy crisis, as we have seen, and also the article that I shared through the website. So the chances are that the price can break through this area very soon, I guess. Also below 75 and 77 that we are here. So the chances are very high that probably we may anticipate also a deep bearish movement. Also, on the coming months, we are going to join the spring and the summer season. So we all know that this type of financial instruments are not used too much during this period of time, and the price tends to move lower and lower. So let's see what is going to happen. This is the bearish scenario for oil. What we have to be careful is only the bullish scenario. The bullish scenario may develop only if price is going to break through this area. If price is going to close above 90, then definitely it will test the upper part of the structure. And at this zone again, the price will face a major resistance, because this is a major resistance structure. Look at how the price reacted during the previous months. So let's see, we are close to a critical area and very interesting as well as a price development. The next one that we are going to look at, just one moment please. The next one that we are going to look at is Australian dollar and yen. I really like how the price is developing on this structure, but we have to be very careful. This is the structure that I'm looking at. It was very interesting because price increased and decreased all the time that it reached the top. Look at the tops. These are very clear for our structures, but on the other hand, they have a V-shaped reversal. So this type of reversals, we can never anticipate if price is going to continue higher or if price is going to just to test a strong support area and to bounce again. A retest of the upper resistance area, and we can see another sell-off here. So considering how price is developing at this moment, we may anticipate the bearish movement, and probably the chances for the price to respect this type of structure is very, very high. But what we have to be careful during this moment. Thank you so much for your comment. I really appreciate it. What we have to be very careful during this moment for Australian dollar and yen that I'm looking at. The chances are high that the price may move down also from this point. Let's break it down on a lower time frame. Look at these shapes. So no one can take this type of reversal. If you wanted to buy here, definitely this was a very risky situation because we don't see any reversal pattern in this area. Also on the upper part, these are not reversal patterns how they are created. Look at this point. So price just broke out. It was looking as bullish scenario, and after that it crawled down. Also on the 1 hour time frame, we didn't have any reversal. Look at the reversals. These are V-shaped reversal all the time. Very aggressive move on the opposite direction. The problem right now is that on Wednesday, we are going to have too many data from Australia. We are going to have consumer price index for the fourth quarter, It is very important. It was 1.8, it is expected 1.6. We have consumer price index again for the yearly. And here we are on one of the main indicator that all the market is looking at, monthly consumer price index for December. It was 7.3 and it is expected to come higher at 7.5, 7.7, sorry. So let's suppose that inflation is going to increase. We will face again with the problem that the market is going to interpret the part of the interest rate. So everyone is going to anticipate that the Bank of Australia is going to increase the interest rates on the next meeting, and probably that may increase the bullish volume on the Australian dollar. This is something that we have to be very, very careful during Wednesday. But if consumer price index is going to slow down the CPI data, then probably Australian dollar is going to be weak. If this is going to come lower, not 7.7, but let's say at least 7.3 or 7.2, this may confirm the trading scenario, the bearish scenario that we are looking at right now. I don't think that Australian dollar yen will move before of the CPI data, because the market tend to wait for this data during this period of time. These are very sensitive data also in normal conditions, but nowadays these are very important because everyone is speculating with this data, all the news agencies. That is why we have to be very careful and probably to stay out from trading. What can also happen if price, let's say, if consumer price index is going to come higher than expected and the price may anticipate the bullish move from the Bank of Australia, then the price may jump above and it can continue to grow more against yen. As we know, the moves against yen are very aggressive, but also yen tends to move very aggressive on its own. So it's not an easy scenario. Everything is related with the CPI data, and probably you should not remember this. So you should know the CPI data in advance that are related with this pattern. The next one is going to be GBPUSD. We are going to focus on this part. I share this analysis also during these days. We have to be very careful considering that the British pound is showing different signals overall. I shared this yesterday as analysis and also an analysis, a live analysis on Sunday. Price is testing 1.24 as you may see. I am anticipating a potential double top pattern, and since January 23 we may see that price came down. However, it is not that easy as it seems. It's a very complex scenario overall. As you may see, the structure of the left is dating back on May 22. So overall, GBPUSD has a lot of bullish potential, as you may see on February 22 when all the big mess began. Price was at this point, so it has a lot of room to grow more, in my opinion. So the chances are very high that we may see the price to recover. However, this is related with something else these days. The first move that we are looking at for GBPUSD almost was reached. As you may see in this point, we have a type of head and shoulder pattern. It is very ugly pattern during this moment, and the chances are high that probably the price may continue lower from this point. However, everything will be related with the FOMC. We are going to have FOMC during the next Friday, that will be on February 1, and probably the market will begin to interpret the data related with FOMC. The bearish movement that I am expecting probably may happen before FOMC, and after that we may see any strange bullish movement again. So all scenarios are related with FOMC right now, because the market is going to anticipate the impact that FOMC is going to create, the interest rate, and their decision as well. However, we are going to talk about FOMC during the coming days. For the moment, this is the bearish scenario, and I think that these targets are more than enough for the moment. The last target is possible, but probably this can happen only during FOMC. So only during FOMC, price can move close to the bottom of this area. I'm not expecting the third target before FOMC. Only if something big is going to happen or any type of strange speculation, only at that moment we may see this type of movement. On the higher time frame, I don't see anything at all for the moment. Also, where the price is right now is a strong and critical area. If we are going to sell at this moment, because we have sellers, this is a must that the price should stay above this point, above 1.24, because if we are going to see the price to bounce, then the next zone will be 1.26. This is something sure, considering that the left structure that is dating back on December 22 is very strong structure, and this is a daily structure as well. However, this analysis stands in a different position compared to Australian dollar. I'm looking at this scenario right now for a specific reason, considering that we are having the CPI data that are going to come out from Australia. And on the other hand, we have also the British pound. British pound came down in these price levels right now only because of the data that they shared today. They came out lower than expected. However, what we may see is that as beginning, price tested this zone again. So I didn't expect this deep pullback. During some weeks, 1 or 2 weeks, I guess, I shared something related with GBPUSD. It was shared on January 5. Price tested the support area, and after that, here we had some correction and the price increased. The low near the support was 1.75 and it decreased by approximately 500 points, 450. So very big price increase in this wave, and after that we can see that price came down again. However, what we can do right now is that it is better to stay out from this trade. It can create both scenarios, considering that it came lower to our zone. Who wants to take the risk for the bullish movement, considering that the price is actually reacting at this point, is very risky, but this is the only way how you can take. You can just buy and you can position your stop losses below the support area that we have here. So this is the only way, and it is not, let's say, safe at all. We don't have higher chances. Everything is 50 to 50 in this situation. And probably we may anticipate the bullish movement that may happen during the CPI data on Wednesday. For the bearish scenario, I have my concern about the bearish scenario, but what may happen, let's say if price is going to break through the lower support, we are in a daily support area, probably the price will create any type of false pullback. We should know that during this period of time, since March and August 22, price was showing that this was a zone where GBPUSD found a very strong, let's say, zone where it was traded from the traders. The chances are high that if price is going to break through this area, 1.7460, the lowest low that it can create again, because it's an area that price was before and we had many buyers in this zone. This is going to be another area where GBPUSD is going to stop the crash. So I'm not expecting anything more for the moment. Let's see. If you want to anticipate any increase in the inflation rate for GBPUSD, just wait. If price is going to come down, that this trading scenario is ready for any bullish reversal from this zone. So you can just wait and be patient, only 2 days for this trade. So I hope you guys enjoyed the analysis for today. I will share, I'm reading comments from TradingView for gold and New Zealand USD. I will try to prepare the charts for tomorrow, and I will try to do another live stream. So thank you very much. Please don't forget to subscribe and press the like button for more future content. I really appreciate your support. Thank you. Bye bye.